Good morning, everyone. I'm Steve Ankerstar, and welcome to the Ankerstar Wealth Morning Show. Again, Allison is off at Bama this morning, so she will not be joining us. Today, we're going to talk about three things. We're going to talk about the CHIPS Act, which is expected to be passed into law by President Biden today. We're going to talk about what's going on with Novavax and the stock tanking after earnings. And lastly, we're going to talk about the importance of tomorrow's inflation number as far as setting the tone for the rest of the year for the stock market. But before we begin, as a reminder, so financial education presentation and should not be construed as personal financial advice. Full disclaimer information is available at ankerstarwealth.com. All right, the CHIPS Act, expecting it to be signed into law today. What does that mean for you and your portfolio and how to play it? Let's talk about a few options. So here's here's kind of the article. $52 billion is going into basically the U.S. chip economy. So when you think of the names that are poised to benefit from that, you're looking at Intel, AMD, Micron, Qualcomm, Broadcom. Any of those names should benefit directly from this. However, you have to balance that from the fact that NVIDIA crushed earnings and cut revenue in half. Whiffed earnings, not crushed earnings, whiffed earnings, and cut revenue in half for their projections yesterday, which took the stock down significantly. So really, when you dig into this space, Micron is probably the riskiest of them all as far as how to exactly play it. I think Intel, unfortunately, with their earnings that just came out and the kind of negativity from the CEO, I don't. It's cheap. You can't, of course, you can say it's cheap, but does that mean it's going to turn around and go higher? And I just don't see the catalyst there for it. So overall, I think Qualcomm. I do have Qualcomm in the book. I'm going to take a harder look at it today. You get a 2% dividend. The valuation is attractive for the first time. It's more expensive than the others, but I think, with the exposure to 5G, I think that's where you're going to see the most upside. Don't invest in the chips right now if you don't like risk, because they could go down before they go higher, right? It'll take a while for this 52 billion to make its way into the chip stocks, be able to take effect, right? So it could be quarters down the road. So if you're out for the risk, buy now. Otherwise, just wait and reassess later. All right, as far as Novavax missed earnings and got hammered to the tune of down 30% after the market close last night. You can say they cut the revenue guidance in half. And again, just like we talked the other day with it was Moderna, and their earnings miss, is there's risk in these stocks, right? I mean, it makes perfect sense. Here's the 1-year chart, but let's back it up to the 5-year. Here's COVID hits, and there's all kinds of money to be made as people pile into the stocks, but you do have to make an exit, right, on things like this. So all the way back down to $39. And when you really look at, down 5% yesterday, 31% more today, and you're like, ooh, I could pick this up on the cheap. I don't know. They're losing money. They're down 60% on the year. I don't know how do you define a floor on this without, even with monkeypox around the corner, who knows if Novavax is going to have a play in that, so you got to kind of wait and see on those things, but there's really no reason to touch Novavax here. If you still have it, I think you can let it go. It's not one of those you want to take to the grave because, it's coming back someday. That's just my opinion, but not hot on any of the, if you're going to go into that space, Pfizer, again, there's so much more than the vaccine, right? Because there's a whole nother, several, ways to win, if you will, with Pfizer. So really wouldn't touch Novavax here. Still wouldn't touch Moderna. Go into one of the bigger names if you're interested in going into the healthcare space. Okay. Lastly, the inflation number, we get another print tomorrow, which is going to set the tone now for has the entire strategy. We have the Inflation Reduction Act. Okay, blah, blah, blah. That's maybe it didn't, maybe, that's just more hyperbole at this point. But literally, we've had a whole year of tackling inflation. We've had horrible numbers up to this point. We've had back-to-back 75 basis point raises from the Fed. We really kind of need to see the inflation number crack, reduce before the markets really can go higher. If it's cut significantly, then the markets are definitely going higher, because that means we're on the right path. We're past peak inflation. We're past peak Fed rate hikes at that point, meaning the next one won't be 75. It'll be 50 or 25. It means we're kind of over the hump, if you will, which would be huge for the markets. However, another ugly number is just going to keep us kind of the markets suppressed, if you will. So really, tomorrow morning is a huge number. That's what I'll be talking about. I'll make the video right after that number is released tomorrow. But if you were to have your fingers crossed for anything in the market, it's like, hey, let's have an inflation number down in the 4 to 5% range instead of these 8% prints that we've had. So that's what I have for you today. Thank you for everyone for your questions. Please submit your questions through us to either email or social media. Don't forget to like and subscribe. That's all we have for today's show. I'm Steve Ankerstar, and we will see you back tomorrow.